First up, how do you expect this government shutdown to impact the resumption of Wall Street trade? Are we going to see a sizable move here?
Good morning, Dan. Yeah, it'll probably go higher. I mean, everybody should be thrilled that they finally shut down the government, all that waste of money that they put together every day. So I don't think it'll affect the markets whatsoever. We've only seen one negative down period in a shutdown, which was 1979 during the Carter administration. Every other one has seen a rally, and based on the markets, I'd expect this market to continue to rally as well.
Okay, so what's keeping this upside momentum intact, and why do markets appear to be shrugging off not just this, but also other political and geopolitical risks out there?
It's a thing called cheap money. As long as the Fed tries to pound and keep interest rates low, the only place to put your money is the equity market, and that's what we're seeing. We're seeing this continued chase for yield. You've got one place to go put your money, which is the equities. And as long as interest rates stay low, that will remain the case. Now, as has happened in the past, the Fed typically will mess up the raising or the hiking of these rates, and we could see a sell-off then. But until then, you can't really fight that the markets are playing this inexpensive, cheap lending money.
Okay, so spare a thought for the hundreds of thousands of federal government workers who are going to be showing up for their jobs on Monday and potentially not being paid for the time being. Do you think this is going to have a sizable or any sort of impact on GDP or any other economic indicators in the United States?
It should not have any effect if it only lasts a couple of days, which will probably be the case. If it lasts an extended period of time, it would have some effect. But again, I think at the end of the day, the big important thing here is to stand firm, because every time they've made these debt ceiling and these budget exceptions, it has been led to more debt. And I think that's where we really have to cut down the debt. So if it takes a little bit more time to create some economic problems early, I think it'll be much better in the long run.
So Todd, tell me how you're positioning right now and what opportunities do you see in the equity market as a consequence of this shutdown?
Well, I think the shutdown doesn't really bother me. I think I'm looking at some of the more distressed companies out there that would be related to consumer discretionary. You know, you look at stocks like Procter & Gamble and Johnson & Johnson. They've been beat down a little bit in this market that's been rallying. I also like to look into the stuff that's either directly into soybeans or into the grain markets, or stocks that relate to them. For example, DBA, which is the agriculture ETF. I can't understand why agricultural products are still so cheap. I mean, going into this year, our farmers are going to have to plant at a loss to start with. So I would expect to see that stuff to start to pick up. I think that oil has probably peaked, and I would look to be, you know, as a trader, I'll look for some spots to take advantage of some short opportunities. As an investor, I'm going to continue to stay in the market and look for places to keep buying.